So, what happens when one of the world's biggest, most traditional financial giants decides to go all in on blockchain? No, we're not talking about some fleeting crypto hype. We're talking about a really fundamental shift in how money actually moves. And the craziest part? It's already happening. Let's dive in. Okay, let's start with this number, $100 million, right? That is the number that made everybody, and I mean everybody, sit up and pay attention. Now, this isn't some pie-in-the-sky valuation or a venture capital fundraising round. Nope, this is cold, hard cash, dividends, paid out from a brand new fund. And that, right there, signals that a massive change is coming. So let's talk about Finance's $100 million payout. Again, this is not theoretical future money or just another wave of crypto hype. We're talking about a real-world payout, generated from super safe, super traditional US Treasury yields. It's proof, solid proof that this technology isn't just an idea anymore. It's ready for the big leagues. It's ready for prime time. You know, the really crucial thing here is who is behind this. We're talking about BlackRock. I mean, they're a titan of traditional finance, right? The fact that they're the ones launching this fund is what makes this such a landmark moment. It just proves that these blockchain-based products can actually work at a massive, institutional scale and deliver real returns. So the big question is, how does it all work? All right, Section 2. What are tokenized securities? To really get what's so special about the BUIDL fund, we first have to wrap our heads around the core technology that makes it all possible. And that technology is tokenization. Now, it's a term you're going to be hearing a lot more of, so let's break down what it actually means.
Yeah, I know, it sounds kind of complex, maybe even a little intimidating. But what if I told you the basic idea is actually surprisingly simple?
So, tokenized securities, just think of it like this. You're taking a traditional asset, let's say a government bond, and you're creating a digital version of its ownership certificate, like a digital deed. This deed, or token, lives on a blockchain. And because it's on a blockchain, it promises way more liquidity, much lower costs, and it opens up investment access to way more people. It's a total game changer. And this slide really lays it out perfectly. On the left, you've got traditional finance. You know the deal. Lots of middlemen, only open 9 to 5, and high costs for everything. But on the right, you have tokenized finance. We're talking direct trading, 24/7 global access, and much, much lower costs. It's basically a shift from a slow, closed-off system to one that's fast, efficient, and always on. Okay, let's get into the build fund itself. Time to see how all this tokenization theory actually works in the real world, how it becomes a real, functioning product that actually generates yield for investors. This is where it gets really interesting. The process is honestly pretty slick and streamlined. Step 1, an investor puts cash into the fund. Simple enough. Step 2, in return, they get these dollar-pegged digital tokens, the BUIDL tokens, that represent their share. In step 3, this is the really cool part. The yield from the fund's assets, like US Treasury bills, is paid out as dividends directly to their digital wallet, on-chain. It's automatic. No paperwork, no waiting for a check. It just happens. And the growth of this thing has been just explosive. I mean, look at this timeline. It launches on Ethereum in March 2024. Just 1 month later, in April, it's already distributing that $100 million in yield. That is an insane speed of adoption. And it shows there's a huge pent-up demand for this kind of thing. And they're not stopping there. They're already planning to expand to other blockchains later this year. All right, Section 4, risks and regulatory hurdles. Now, for all this incredible potential, and it is incredible, the path to mass adoption isn't just a walk in the park. It's important to be realistic and acknowledge that there are some pretty significant challenges that have to be sorted out. And these operational risks are no joke. We're talking about major stuff like cybersecurity threats. You've got to protect against really sophisticated hacks. Then there are potential smart contract flaws. I mean, if there's a bug in the code, money could just disappear. And of course, you have to worry about the basics, like potential settlement delays, service outages, or cyber attacks. The system has to be rock solid, 24/7. So to build the trust needed for this to really take off, you absolutely have to have a strong regulatory framework. It's non-negotiable. And that framework really rests on 4 key pillars. First, you need securities compliance, making sure everything is registered and disclosed properly. Then AML and KYC compliance to verify identities and stop bad actors. Third, real investor protection with clear rules to prevent any kind of market manipulation. And finally, financial stability, so the whole system is safe and sound.
Okay, final section, the future of your money. So when you put it all together, you've got this incredible proof of concept from one of the world's biggest players, and you've got a clear path forward for regulation. So what does the future actually look like? And more importantly, what does this shift mean for all of us and the markets of tomorrow?
This quote really just nails it. BlackRock's BUIDL fund is proof that tokenized finance can go beyond experimental stages. And that's the key takeaway, right? This isn't some science project in a lab anymore. This is the real deal. So here's the big takeaway. At the end of the day, tokenization has the potential to completely revolutionize finance. It can create much greater financial inclusion. I mean, think about things like crypto payroll or stablecoin solutions. A business could pay its employees anywhere on Earth instantly with almost no fees. That's a fundamental change, and it could transform how individuals and businesses manage their money. So that really leaves us with the big question, doesn't it? As these two worlds, the old world of traditional finance and the new world of tokenization, start to merge, the walls between them are just crumbling. The transformation isn't coming, it's already here. So the real question now is, how quickly will it transform the way we all invest? It's something we're going to see unfold in the next few years. Thanks for watching.